All right, welcome back to the short of it, where we cover everything in the short selling world in under 45 minutes. We got a banger this week. Everyone wants to know about our favorite firm, Archegos. So let's just jump right in. Carson, what are you thinking about this right now?
This is a special short of it, in part because of the topic, but also Dan David is not joining us. He's off on disciplinary leave because he has decided that he's not going to swear as much, starting with his podcast. And so I felt that we needed to give him a timeout, let him hopefully, find himself and then rejoin us on the show. So, first of all, I don't know how the you pronounce the name of that firm, but I think we should just call it Archegos. The reason for that is it's unclear how many billion he had, but it was multiple billion, and he decided to lever that 5 to 1.
Bill Hwang flew a little too close to the sun. By taking on an insatiable amount of risk, he grew his Archegos Capital Management into an investing whale. But when several positions turned against him, it didn't take much to tip his firm into turmoil, causing tens of billions of dollars in forced selling. Now, the risk levels he ran defied logic. I spoke with several hedge fund managers who said they could not fathom that type of tolerance. The Financial Times reported that banks were lending to Archegos at ratios as high as 8 to 1.
He has probably taken himself from a lifestyle where he could have easily afforded a fleet of G6s to being relegated to net jets for possibly the rest of his life. And I don't know what would motivate somebody with that much money to run that much insane risk other than massive ego. So I think we start with calling it Archegos.
It has made me think about some lifestyle choices. I've generally live like reasonably frugally, and it actually did catalyze that I'm probably going to buy like a nice car, because I've just decided that if I ever wipe myself out in 3 days time, I want something nice to drive myself off a bridge in. It's mind-blowing to me because I keep thinking about this. Well, maybe he's got like a little bit of money tucked away somewhere, and then I just think to myself, does the kind of person that runs whatever it is, 2, 3, 5 times leverage on like that much personal money, think about a rainy day? And I gotta wonder if they do, because that is insane.
Speaking of which, you guys have crossed paths in a specific stock that they were long. Um, and you had pretty much an antithesis view on the stock as they did. Can you walk through that whole scenario?
I really hope a lot more comes out here. But so we've been short GSX since middle of last year. And GSX is China, it's online education, and it's a near total fraud. We published extensive research on it. We think at least 70%, probably more than 80% of the users are fake, that they're just bots, and probably 80 to 90% plus of the revenue is fake as well. And we weren't the only ones to call this thing a fraud. Grizzly, those are guys who used to be geo investing, so they've got credibility in this space. They were the first ones. Then Citron came along, called it a fraud. We called it a fraud. Then JL Warren, which doesn't normally do activist work. It's subscription research focused on China. And the principal there, Junhong Lee, she wrote Tiger Lady on Wall Street. She came out and has repeatedly publicly called it a fraud. Another firm that is based in China I'd never heard of, but did decent research on this, called Scorpio VC, also called it a fraud. And I've never been involved in a situation where so many credible researchers have called one company a fraud. And the thing is, we all get there through differing methodologies, and we all come to the same conclusion. So you would think that this company the stock price would have been in the dirt long ago, but that's incorrect. Subsequent to our coming out, this stock more than tripled on us, and it actually became everybody talked last year about Wirecard and what a massive fraud that was in terms of market cap. But this GSX actually exceeded at peak Wirecard's market cap. And I think it did that twice. So what was going on? Well, one of the things that was also unusual about GSX was almost every time we go out and call something a fraud, right? There is a cacophony of defenders on the other side, saying you misinterpret this, you got that wrong, you ignored this. But with GSX, it was weird. And usually these defenders, if it's a Chinese company, will come from China. But there just wasn't really an opposite side that I discerned being expressed. It's just such a clear fraud that I think your average Chinese retail investor agrees it's a fraud. But yet it tripled. What was happening? Well, looks like a lot of it was Bill Hwang and his Archegos. Another was his former protege, Tao Li, and his firm, Tung Yue, and then maybe some others. And Tiger Global was disclosed long. I don't know if that was part of a box or what the deal was, but they tied up enough float. So if you look, the top shareholders outside of the management are all banks. So the banks were holding these positions on swap. And I think when you just add up the swaps, you have almost 70% of the float was choked. Now, there's another player in this also that we shouldn't forget, and that's this guy whose last name is Tian. And Tian runs a fund in Singapore called QQQ. And he's actually good friends with the CEO, the chairman of GSX, Larry Chen. In fact, Tian went to GSX's stand on the balcony at the NYSE and, stroke each other off event when GSX went public. Tian has publicly admitted on Twitter and then took the posts down that he was a big put seller. And this was one of the things that we realized was causing the squeeze. When we talked to desks over the summer, they said, yeah, big seller of puts in Asia, at the money puts. And so buyers of the puts, which were, market makers, were putting on deltas and they were buying the stock. And so that was creating this buying. At the same time, a bunch of float had been choked by these swap positions. So if you go back to the interview that I did with Mike Green, when we're talking about how passive creates this upward price convexity by replacing active and choking the float, that's exactly what happened here. And then one more thing that I noted for good measure was apparently that Chinese retail brokerage that's public in the U.S. Traded under Tiger, Tigr, no relationship to the Tiger complex. Apparently, its name is Up FinTech. A lot of Chinese retail had stock or was shorting through that and had their borrow pulled all of a sudden. And there's a board member from Up FinTech. There's a GSX board member from Up FinTech. So I feel like there's kind of an unholy alliance there. But look, I don't know if this conduct rises to the level of illegal, but to me it seems like there was Tung Yue and Bill Hwang. There's no way they didn't know that GSX is a fraud. Okay, there's no fundamental case to be long. I swear to God, there's no fundamental case to have been long this at the time they went long. The only reason to go long this is because you think that it's going to go up because of a squeeze. And it seems to me that you'd have to know that a bunch of other people are going to be buying a shit ton of the float around the same time that you do if you're going to make that play. I really want to see this investigated. I don't know that there was illegal conduct. Maybe this is in a gray area, but if it is in a gray area, it's pretty charcoal from what I can see.
For people who are watching who can't necessarily tell, that is what Schadenfreude looks like. That piece from that smile, that's as good as it gets for us short sellers. It's not even particularly lucrative for us. It just feels good. I mean, the pain that lots of short sellers have felt, not in this name actually, I think there are many names that it turns out Bill Hwang was involved in pulling a similar strategy, and whether it was him acting alone, whether it was a consortium of funds, whether he's really just a family office. Because the other bizarre thing is he had a website, had recently got off of a ban that had been imposed on him in relation to some insider trading he did many years ago. Um, it really appears, looking at the stock charts of many of these names, that the only thing I can deduce is at some point that really became the strategy for him, whether it's VIP Shop or IQ or Viacom or Discovery or any of the names that he appears to be involved in. They all have a chart that looks, very much like someone has been manipulating the stock. Now, the scale of this is pretty unprecedented in terms of someone vaporizing that much personal wealth. There have obviously been high-profile hedge fund blow-ups in the past, whether it's Amrath or LTCM. But I think it's quite possible this guy has actually destroyed more personal capital than possibly anyone on the planet. Maybe Massa might have had taken a bigger net worth hit from like top to bottom in the dot-com boom, but whatever, they can fight it out between themselves who destroyed more personal capital in the blink of an eye. It's a battle for them to have.
Let's talk a little bit about the brokerage lending of credit in this situation. How exactly do you get $50 billion of a credit line on total return swap in his position?
We think the amount of credit could be a lot higher, actually. We suspect that his capital was much larger than being reported and that he still levered it 5x. It's funny watching the brokers try to downplay it. Wells Fargo got some blocks to do, and that was after at least MS told their clients that there were no more blocks that they were offering. So I kind of wonder if, you say that to try to calm the market down so it doesn't destroy the value of the collateral you're trying to unload. And then you make that true by having Wells or somebody else do these blocks. But we think there could be a lot more there. How you do it? I don't know. I mean, most of the firms that were lenders to him have told us they won't do business with us. So I really have no idea.
Yeah, it's an interesting question. I think as this unfolds, we'll find out more. What seems to have been the case is that actually he was not on the the good boy list for a number of these banks initially, and look, we can't ignore that. Despite the blow up, this guy clearly had turned some large sum of money into a really large sum of money. You can't be a complete idiot to do that. The idea is to keep the money once you turn it into a ginormous sum, but whatever, you've got to be pretty sharp to get there. And so directionally, he must have done some things right with a lot of leverage. I suspect what happened is, if his true size is as large as we think it might be, he would have been a significant payer for most of the banks. I mean, he could have easily been within the top 10, 20 clients for a large number of these banks, if not, top 5 client. The way that banks are run, if you're the person who is saying no to someone that can pay tens of millions of dollars in brokerage and swap and financing fees a year, that becomes increasingly difficult as all of your peers are doing the same thing. So I'm sure what eventually happened is the people who were naysayers and said, look, there's a track record for insider trading, there are other problems around this, whether it's the position concentration or leverage, I'm sure those people got pushed to the side. And the people who ran those business units probably thought that they were taking reasonably smart risk, or by the time that this guy blew up, they would be in a seat at another bank getting paid even more for doing such a great job bringing in the business. So I'd imagine it was somewhat of a slow erosion. What is really interesting is the way that different banks appear to have dealt with the risk. while they may not want to deal with us, and truth be told, not a lot of upside given the way they treat their clients dealing with them. I mean, hats off to Goldman for taking the medicine, clearly realizing there was a problem faster than anyone else, offering their clients the opportunity to participate in block trades ahead of many other block trades that were likely coming. One of the privileges of being a Goldman client. But hats off to them in the way they took the medicine, obviously realized there was a problem very quickly, and dealt with that to, at least what they've disclosed to be minimal losses. I mean, that is first class in terms of risk management, however they got to the problem.
On Goldman, they retain the heavyweight title as being the champion of all prisoners' dilemmas.
Exactly. For there to be a problem whereby this guy was priming with Wells Fargo, who are not well known to be like significant players in the prime brokerage business, that tells me that Bill Hwang had been very smart in looking for leverage anywhere and everywhere that it could be provided. The second thing I find interesting is we don't yet seem to have seen any block sales out of either UBS or Credit Suisse. Credit Suisse have come out and said they have significant exposure. The numbers rumored seem to go up every day. UBS have not yet come out and diagnosed the size of the problem they might or might not have. So if you don't have block sales and you don't have a dollar figure around the problem, you can only assume that either they've decided this is a great portfolio of names that they want to run, or that the number is very, very large, and there's not a lot of upside if you still have massive exposure on your book to broadcasting how big the problem might be. Now, the additional issue, I think, will be the reaction to this across the street from primes. So I think we will likely see primes taking a different view to leverage. Typically regulation and risk management is somewhat more reactive. So if we do see degrossing of more highly levered strategies, which may have been occurring anyway in the light of Melvin and the way that risk was looked at on the short side, if we do see that occurring on the long side of people's books, we could see degrossing across, whether it's the Tiger Complex or just other people who have similar thematic trades on. We could see leverage being taken down across the board, which, if handled in an orderly fashion, doesn't present major risk. But if it's handled in a less than orderly fashion and everyone's racing to get out of the same trades, does present a really interesting problem for the market.
We've seen none of that come to pass so far. Do you think that's just a delay, or is that just, I guess, it's a non-event and the liquidity from the government kind of makes up for that?
Seems like the banks, after last Friday anyway, seems like the banks are cooperating pretty well and playing it pretty cool, especially if we're correct that there's a lot more in the way of positions that need to be unwound. So if that's true, I mean, if we're talking total position unwinds, 100 to 150 million or billion when all is said and done, so far the banks are doing a great job of playing it cool. I'd expect that they won't push their clients to degross until after they've worked through this inventory.
So on top of all these things, one of the things that you guys have taught me is that the whole virtue signaling thing is really a big factor in finding frauds from people. And Bill Hwang fronted himself as a great Christian in a lot of these circles.
What do you do on a weekly basis to engage in God's word?
Yeah, so again, knowing that that's how Jesus and God's people have trained themselves, and then that's how they show their love to God. Hey guys, why do we listen to God? Why? One, because we love him.
Do you think that had anything to do with the ability for him to lever his fund?
I spoke over the summer to an allocator who knows him and has money or has had money in the past with Tung Yue. I was railing about how I think these guys, they must know it's a fraud, that what they're doing is at the very least immoral because they're certainly providing a supportive environment and remunerative environment to fraudsters. And the pushback was, well, Bill Hwang is a fantastic guy, and all the causes he's been involved with, he's really a stand-up guy. And then I said, wait a second, this guy has a real disciplinary track record here. I don't know if the person I was talking to knew that, or if it just no longer mattered because of all the wonderful deeds he had done. Certainly dirtbags do tend to cloak themselves overtly in religion and religious causes. But I think that's also missing a little bit of something here with Bill Hwang, because some of the causes that he supported, while they are Christian causes, focus on the family. And they're, pretty anti-gay, fairly reactionary, hardcore causes. So look, net, I don't think he was presenting the warmest, fuzziest exterior if you really looked at it. But, I am inherently suspicious of somebody who does wear religion on his or her sleeve.
The website, which has now been taken down, is, it wasn't something I'd visited before, but it actually reminded me, when you looked at the text and the kind of waxing lyrical about efficient markets and kind of tying it into goodness, reminded me a lot of B.R. Shetty, who had and probably still has his own website with quotes about how, enrichment is for the goodness of society and all of this that billionaires spew, and, people have to listen to them because it's in their interest too. Of all the people I'd say I've come across in the past few years, reading their two websites, I really did kind of draw a little bit of a parallel between the two of them.
Going back to my earliest days doing this, China Media Express in early 2011. I remember some of the that cacophony that came back at us with "No, can't be. He's a devout Buddhist. Did you know what he was doing with the victims of the Sichuan earthquake? He's a devout Buddhist. And just A, irrelevant, and B, well, if it's going to be relevant, probably supports the wrongdoing view more than anything else. But yeah, time and time again, people fall for it. And one of the books that I've enjoyed reading, I've read it a couple of times, is a book called Spy the Lie. And it was written by some people who were ex-CIA polygraphers. They've got a firm called QVerity, and we occasionally engage QVerity to review transcripts for us to look for signs of deception. But that's one of their favorites they cite in the book, favorite signs of deception. Somebody's accused of, hey, did you steal, so-and-so's wallet? No, I'm a good Christian. I go to church every Sunday. Look at my trunk. It's filled with Bibles. That's a classic way of trying to divert attention from somebody's wrongdoings is religion. So I'm an atheist, so I'm kind of talking my spiritual book or lack thereof, but I am inherently skeptical of people who really just bang the drum about their faith in XYZ.
He's even convinced Julian Robertson. Everyone in that complex says he's a great guy, which is fascinating for someone who calls bullshit for a living, I think, for 30 years in the market, right?
Everybody's a great guy till they're not, and I read the Bloomberg interview with Julian Robertson. He didn't seem, just based on what I read, he didn't seem to have be that steeped in the facts. And I think he was relying more on his personal relationship. But that's also the point about con artists. And I'm not saying that Bill Hwang is a con artist. We don't, at least in this case, it's not an issue so far, it seems, of him really cheating people. But a lot of, people who do get conned, the way they get conned is they have warm personal feelings towards somebody. That's what a good con artist does. generates warm personal feelings, sense of trust, and then boom, takes your money. And, the people who are bad at it, never make the headlines. The people who are good at it, most of them end up in the capital markets.
It does smell a bit like Bernie Madoff of this cycle. So do you guys think this has more to come? Is this kind of a contagion effect, or is this just isolated for now?
I really think that does go back to how big the exposure really is across the primes and how reactive they are in terms of leverage levels they're allowing other funds to run. Yeah, it will be interesting to see. Needless to say, this is probably his last act, but you really can never write these guys off. Like, if history's shown us anything, the best way to launch a hedge fund is to blow one the up in big size. If Merriweather can come back, don't write off Bill Hwang.
I mean, Merriweather's had, 3 blowups?
That we know of.
Yeah, I mean, well, that includes Solomon. Wasn't a hedge fund, but,
Yeah.
required it being bailed out. So if Bill Hwang is a true champion, he will have to have 4 blowups. He's got to take the title. All right, Bill, I'm counting on you, buddy. Take that title.
Let's move on and pivot a little bit and move on to something a little bit less sexy as giant leverage, and we'll move on to Cathie Wood and her ETFs. I know Freddy saw some adjustments there. Can you grace us with what Cathie is doing these days?
Credit to actually a number of Twitter accounts, I think maybe Stock Jabber and KUBK, who picked up on some really interesting changes that have happened. So Cathie Wood has, I believe, increased the amount of a percentage of market cap that the ARC Innovation ETF is able to own, up to 30%, which is a really significant amount of any company to be owning if you have daily liquidity in your fund. In addition to that, there are actually a number of ARC ETFs that own other ARC ETFs. So this again appears to be another, let's call it an innovation, in order to funnel money from one pocket into the other. And then I think, honestly, the most enjoyable stuff is what the space ETF is actually going to own. One of the companies that was noted was Dianping, the Chinese. It was either Dianping or Meituan, the Chinese Meituan, the Chinese sort of like Uber delivery type, and a bunch of other businesses bungled together. There does appear to be something called like a space pod or whatever it is, but I believe that was just like a type of sort of container for food. I think John Deere may have featured as the 12th or 13th largest holding, which, again, possible that John Deere do have a secret space program under wraps, but as far as I was aware, they mostly sell tractors.
Right, but you will need tractors to create farms when we colonize other planets. So as soon as warp drive is done with development, those John Deere tractors are going to be exported throughout the galaxy.
So, why is this important other than it seemingly lacking any rational credibility? To me, it's a sign that, there is probably some level of concern about outflows, and there is possibly a concern about, either scarcity of awesome opportunities or potentially needing to be able to buy more stocks that you already have significantly concentrated positions in. Now, why I bring that up is, and I'm not trying to draw a parallel to Neil Woodford because it was very different in terms of the levels of concentration he had, but towards the end, before that really unwound, he started to do things that were, entirely driven by propping up companies he was invested in, whether he was having one fund invest and then another fund invest and then the same fund investing again to mark investments up. He famously moved some of the illiquid companies into it was either Guernsey or Jersey kind of OTC type market in order to fudge the definition of what was deemed listed in order to meet certain regulatory requirements. So, I'm not saying that this marks the turning or some sort of spectacular implosion because that may not happen, but I think investors do need to be attuned to changes that are being made that possibly allow a manager more flexibility when they're painted into a corner, because I think it's a good sign of possibly what they're thinking one step ahead of potential liquidity issues.
She said one thing that a few weeks ago when I saw her on CNBC that was kind of interesting. I mean, just so the market past month and a half has been our kind of market, much more so than hers. But she was asked about the 10-year Treasury, and the yield had gone up. I think hit 1.6% around the time that she did the interview, and tech had been selling off. And she said, "Well, the 10-year Treasury's gone to these levels before, but tech stocks didn't. Investors in tech stocks didn't seem to care. Now they suddenly do." She would actually. I don't think she said that now they suddenly do part. So she was making the point that she's perplexed as to why 10-year yields matter. These companies that aren't going to be producing cash flows, or like nobody fucking seems to care whether they're ever capable of producing cash flows. And I agree with her. Like I don't know why it suddenly matters. Like why that was the excuse for people to sell these things. But yeah, so it's one of these rare moments where I think she actually said something pretty wise.
What is interesting is, and we're seeing it a little bit in the SPAC market, the supply of companies has actually increased quite significantly now. I think last time I checked, it was about 80, maybe 90 billion of SPAC capital that have been IPO'd this year. I don't know if that did or didn't include pipes as well, but if you assume outside of arbitrages and hedge funds that are playing that game, that is attracting some amount of the highly speculative capital. I do wonder if, similar to 2000, where you just ultimately did have a very large supply of IPOs towards the end, you've run into an issue where the money that might have been directed at the hyper growth, more speculative end of the market is being allocated to SPACs. And look, finally, I think what's very obvious is the next stimulus check was supposed to be a big catalyst for the market, and it looks like that is being spent on just good old fashioned vices. Up noses, down panties, being knocked back in flaming sambucas, and I don't know. As someone of that generation who values experiences, I think that's going to be a better one for most retail investors than when the market turns. So, get out there and spend your stimmy on things that are going to give you hangovers and regretful venereal diseases.
Totally agree.
Speaking of that rotation, when we get into the capital versus labor dispute, meaning now fiscal is really turning up and that money is now going to the hands of a completely different part of the economy. Do you guys see the rotation out of these super high tech narrative stocks and into the value stocks? Will that open up the game for activist short selling again? Because just about a month ago we were talking about Andrew Left tapping out of activist short selling. Is there a psychology in activist short selling now that's like, oh my gosh, this is it, this is turning, now that this is happening?
I don't think that activist short selling was doomed or looked doomed for more than 2 or 3 weeks. So I'm reasonably optimistic about it, and I don't think you need a rotation into value for activist short selling to have a place and to be able to do reasonably well. I think what we really need is, what we've needed is some appreciation of risk and some discipline in the market. And we're still, lots of pockets where things are pretty unmoored. But when we see things like, Ark and Cathie Wood losing their luster, and, this guy who Julian Robertson evidently still thinks is a genius, blowing himself up by being, completely idiotic. I think there's an appreciation for risk that's coming back into the market, and it's interesting because when COVID hit last year and the markets froze up, a lot of us who've been skeptics were saying, yeah, we told you so. All these years of cheap money making balance sheets fragile, these chickens have come home to roost, and then we pretty much got run over by the party bus that was going 150 miles an hour. And this is a more gradual, I guess, reabsorption of risk by the market, and so maybe it's healthier, and it's there isn't going to be a party bus that you can just jump on and drive away with screeching tires in this case, because it's more gradual. But I think that's what's making this a less hostile environment for activist short sellers. But there are fewer of us, especially because Andrew was almost like 1/4 of them, and he's gone. But for those of us who are left, I'm a lot more positive and optimistic about the environment. You rarely hear me say those things than I was back in January.
Yeah, that's actually just for this one. Just cut that and just run Carson saying I'm positive and optimistic for 45 minutes, because I know
That's
we've
what
been
Schadenfreude
working a
does.
while and struggling to remember the last time I heard those words come out of his mouth.
You know what? That's true. Like Tyler said something though there. We could chalk it up to Schadenfreude's a hell of a drug. Fucking high on Schadenfreude, man. All weekend, so high on it. I'm binging on Schadenfreude. So maybe in a week, I'll be more my normal baseline of, usual pessimism and disgruntledism.
Well, you guys deserve it after the past couple years. But yeah, thanks. This has been a hell of an episode. Anything else that we're missing that we should talk about?
Dan David.
Where is he? He's getting his
He's in the corner learning how to swear again.
He was actually he was going to refrain from swearing because he was planning on just going to Jesus camp for a few weeks. He thought it might help his ability to pick stocks, but
They lost their
that's been kind of
the Bill Hwang's Jesus camp he's going to. Well, until next month, guys, this was a pleasure.